In this video, we are going to be analysing GameStop, ticker GME. If you want your own stock analysed, throw that in the comments and we'll get round to it when we can. Now, we'll go back about a month. They had their earnings, they popped off this news, they went all the way up to $27. What happened as soon as that earning release came out? Again, obviously an overreaction, still a fundamentally weak company. We pulled back on that news. Now, where do we come back to? And this was kind of quite key, is right now we kind of come back to the pre-earnings kind of key level. We pulled all the way back here, basically relatively smoothly. We've got a bounce off this level. Now, again, that is normally a trading opportunity. You can look to play those long bias bounce, but we are most likely not going to continue higher. The reason I say this is if we zoom into the standard deviation channel chart, what we can see is we got a resistance very close at 2180. So if we did push higher, I could see us going up maybe about a 0.20 from where we are now, coming into the 2180 and then really starting to pull back, and that probably would be our overall reversal before we break below the recent low and kind of continue that downward trend that it's been having over the past year. And that's one of the key things to always be paying attention to when you're looking at stocks like this, is what have they been doing over the past 6 months and what have they been doing over the past year. If these two line up, then really it's an easier stock to be able to trade. So in the case of GameStop, downtrending on the 1 year, downtrending on the 6 month. So to me, if I'm trading this stock, I want to be trading it short bias, and if I do trade it long bias for any reason, I'm going to be reducing that size. So again, that's why ideally I want GameStop to push up that 0.20, come into that 2180, and then again I can look at that short bias and be trading that short bias with a target of again around an $18. Reason for that is again that is statistical mean. It's also kind of that recent low, and it is we never fully filled the pre-gap or the pre-earnings gap fill. And by that I mean if we zoom out, you can see we came into that range, but we didn't come down to that 1765. We only came down to around $18. So we still got to fill that gap. So again, in that range is where I'll be looking in the majority of the profits. But it is always important to pay attention to that 6 month and 1 year trend. And then that's why I like the deviation diff. Maybe the trend is a bit harder to see. I mean, in the case of GameStop, very clear that it's a downtrend. But if it's ever maybe a bit less unclear, then again, deviations make it very clear. If they're both pointing down, then obviously it's a strong downtrend. If they're both pointing up, strong uptrend. And if they're basically trading flat, which again can happen if a stock is kind of range bound, again, you kind of get your information from that. So 2180 is going to be that key level. If we did end up breaking further though, we would be looking at a 2375, 2550, going into around $30. And if we went kind of parabolic, we would be looking at $33, $36, and $42. But really my main focus is probably going to be these three key levels here. So 2550, 2375, and 2180, with 2180 being kind of that key level. I think it will kind of be that kind of bounce you get before you continue that strong downtrend. So that's what I'm basically paying attention to for now. Move to 2180 and then really looking to trade that short bias trade to around $18. Now, on stock like this, it can be volatile. I never want to be trading kind of naked shares. So if I'm shorting the shares, I'm buying calls to hedge it. Or again, I can just buy the outright puts. Or again, if you're maybe not so sure on the time frame, then you can trade it through credit or debit spreads. Again, there's so many different ways to trade it. And that's really the great thing with the stock market, is if you trade it with outright shares, again, you can hedge it with the options. But if you really go into the options markets, there's so many ways you can trade this. And that, will allow you to trade on different time scales. So that's going to be my main focus. We will point out the supports just in case you're curious. But again, my main focus is if we break to the downside, I'm probably not touching it. My main focus is 2180, looking to trade that short bias with a target of $18. That's my main trade plan. If we do, though, however, break below, then what I'm paying attention to is a break all the way down to our first deviation, which in this case will be $14.36 to around $11.25. So these would be the key supports. If we go lower, we have $10.60, and really if we have an extreme move, we have about $5.06.90. So those would be the key supports on the downside. But again, to me, I'm not even going to pay attention to them. I don't want to catch this stock long bias, because again, there's just more risk on the table. If it kind of did that in a sudden move, like on this earnings release where we got a massive move, if the premiums were cheap, then I'd potentially look to trade it. with small size, but really the main focus is trying to catch it with the 1 year and the 6-month trend. And if we can trade it in that direction, our probability of success is going to be that much greater. Anyway, I hope you enjoyed the breakdown on GameStop. If you did, why not drop a like and subscribe? Again, like we said, if you want a stock analyzed, throw it in the comments. And if you enjoyed the video, why not check out this one?